Hello and welcome to Business Daily on Trust Television. On this program, we bring you up-to-the-minute information from the world of business, commerce, finance, economy, and the stock market is not left out. I am your host, Christiana Amodu Otinya. Thank you for joining in on the program today. First, we'll begin with the headlines for today. We begin from the pension sector. Contributory pension scheme. Federal government releases 13.89 billion naira for 2022 retirees. And in the oil sector, crude oil says on the rise, prices gain as Saudi Arabia cuts prices to markets. We'll give you more on the stories of the Business Roundup segment of the program. I'll take a short break. When we return, time to delve into the stock market. Please stay with us. Welcome back. Now let's get straight into the stock market. We begin from the local bourse in Nigeria, and we are seeing the Nigeria Exchange Limited recording its first decline for the year 2023, down 1.53%, and this is as a result of profit-taking activities on the front of heavyweights, and this weakened the key performance indicators at the close of business on the Nigerian stock market. So we are seeing the penultimate trade end in negative zone. The all-share index settled at 50,868.5. To recall that the Nigeria stock market stayed largely resilient for the year 2022. On the activity chart, a total volume of 138.716 million shares, valued at 1.83 billion naira, changed hands in 3,673 deals on the floor of the Nigeria Exchange. The equity cap also settled at 28.10 trillion naira. Now let's go over now to other African bourses we update you on. We'll begin from JSE, talking about what's happening in South Africa. So it's a positive run for these markets. The JSE is up 0.84%, and the GSE in Ghana marginally up 0.01% at 2,445. For South Africa, Africa's largest exchange, 17,074. And on the domestic front in South Africa, now there's expectations, and investors are looking ahead to a fresh PMI survey in South Africa's private sector, and this is supposed to come in for the month of December. Now let's go over to Wall Street in the United States, where we saw stock futures climbing cautiously in early Friday morning trade as investors looked ahead to the December jobs report release. Now, a strong jobs data earlier in the day led to declines in major averages and pointed to further rate hikes ahead. Now we are seeing that the markets there are jitters basically in the market as a result of the offshoot from the Fed minutes from the month of December. Now, that was a key document that a lot of the markets, they were looking forward to. The market watchers were waiting for cues as to what to expect from the Fed in the year 2023. And the minutes is saying we are not backing down. Central bankers are saying we are going to stay largely hawkish to rein in inflation for the year 2023. There were expectations that central bankers will be more moderate in terms of tightening. 2022 can be tagged the year of tightening for central banks as a result of trying to consolidate basically to see how inflation can be brought down. So it's a sea of red here for the indexes on Wall Street. The Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq down 0.76%. So it's all in the negative territory. Let's go now to Europe. Now we are seeing European markets still staying cautious. Also, markets are staying cautious in Europe, but slightly higher. We are seeing some investors trying to shrug off the concerns. But one thing that remains in the horizon for investors is the fears for recession. The IMF, the International Monetary Fund, Kristalina Georgieva, she is saying that the IMF is saying 1/3 of the world is supposed to go into recession. And what does this mean? This is probably painting a picture of gloom. Investors are asking, what is the silver lining for the stock market. What are the cues that should be expected to bring some sort of relief to economies around the world? Let's go over to the Asia Pacific region, where we are seeing markets trading mostly higher in Asia. The Nikkei 225 in Japan is up 0.59%. The Shanghai Composite in mainland China climbed 0.08%. And in the South Korean Spirit, the Kospi is up 1.12%. Recall that the South Korean Kospi and Russia stock markets were on the bottom of the chart, talking about the best stock markets for the year 2022. We saw this particular index was really at the bottom of the chart. Let's move over now to the commodities market and see what the chart is looking like. Now we are seeing more of greens here than reds. For Brent crude, the international benchmark for crude oil up down 0.05% there, I beg your pardon, $78.65 per barrel. Now, many are saying, well, we're bringing it back home here to Nigeria. We are seeing talks around President Muhammadu Buhari's exit budget, the last budget for the President Muhammadu Buhari-led administration, looking into the parameters for oil, which we are seeing benchmark as the international benchmark for oil. We are seeing $75 per barrel for oil. And international market, we are seeing the price oscillating between $78 and $80 per barrel. What does this then mean for oil revenues into the country? Recall, the Minister of Finance did say that the Nigerian economy cannot be tagged a mono economy whatsoever that's solely dependent on oil. It may seem as though the economy has been able to be free from the shackles of the oil spell, as we are seeing sectors like ICT, financial services, non-oil sector, agriculture, contributing majorly also towards revenue generation. But many have asked, why is there still a revenue lag for the country? Let's take a look at other commodities. For gold, the bullion is at $838.75 an ounce, up 0.31%. Coming now to the bottom part of this chart, where we have palm oil, wheat, and cocoa, talking about the agro commodities. We are seeing wheat and cocoa staying largely higher, 0.76% and 0.54% there, up respectively. However, for palm oil, we are seeing a decline of 0.76% there at $4,059. So we are seeing a lot has been said about how much more diversification needs to go into the agri sector to ensure that more money is coming to the coffers for the country. Let's put a watch on cryptocurrencies now and see what's happening. Bitcoin down 0.39%, Ethereum down 0.32%. However, for the Binance coin, we are seeing a positive for them, 0.09%, and the Binance coin is at $256.04. For Bitcoin, still standing at the $16,000 mark, and for Ethereum, $1,247. Of course, remember, the cryptocurrency market has been in the eye of the storm. How the market is going to navigate that whole process is being the focus for investors and those that monitor the market as they come into the year 2023. Those are the numbers we have to crunch for you. Trust us to always keep you updated from the stock market. However, at this juncture, let's bring you a roundup of business stories. Take a listen.
Who retired in the year 2022. The National Pension Commission announced this in a statement, stating that the accrued pension rights represent an employee's benefits for the past years of service up to June 2004. The Commission added that it is processing payments into the various retirement savings accounts of the affected retirees and their pension fund administrators, noting that the recipient will be notified in due course. PENCOM commended President Muhammadu Buhari for his commitment to the implementation of the Contributory Pension Scheme (CPS) and ensuring the welfare of retirees. Oil prices gained marginally as the world's top crude oil exporter, Saudi Arabia, on Thursday cut the prices of all its crude grades loading for Asia in February to the lowest level to regional benchmarks in over a year as demand concerns continue to prevail. According to oilprice.com, Brent crude gained 0.69% to trade at $78.38 per barrel, while the American West Texas Intermediate gained 0.56% to trade at $73.25 per barrel, as at the time of the state-controlled Saudi Aramco slashed the official selling price of its flagship crude grade Arab Light to its main in Asia and Europe for February by $1.45 per barrel, setting the price at $1.80 a barrel above the Dubai-Oman benchmark. The premium to the Dubai-Oman average is the lowest since November 2021, but it was generally in line with expectations.
For the business roundup, our focal point on the program today, of course, we're continuing the conversation on the budget that was signed by President Muhammadu Buhari, 21.83 trillion naira. And we saw the Minister of Finance, Zainab Ahmed, also gave a breakdown of the budget, with the Director General of the Budget Office, Ben Akabweze, present also at that ceremony. Now, we are going to be looking at those figures, basically talking to the numbers we have seen in the budget. There's been the conversation around the budget has been largely surrounded around the revenues. Where will the monies come from? Also, how much more needs to be done in terms of bringing in revenues into the coffers of Nigeria to finance the budget. There's also the deficit of about 10 trillion naira. I will be joined on the program today by macroeconomic analyst Professor Ken Ife. He will be giving perspective to some of these issues, basically looking at it from the prism of a macroeconomist. What should be expected from the budget cycle in the year 2023. So it promises to be very insightful, and I want you to stay tuned. We'll be back after this short break. Please stay. Welcome back, and thank you for still staying there with us on the program. Like I mentioned earlier, the first meal we were served on the financial table for this year was, of course, the 2023 budget signed by President Muhammadu Buhari, and we saw the breakdown coming some days ago. Our correspondent was present at that breakdown. Let's take a listen to what she brought back from that event. We'll bring that to you in the course of the interview. However, let's now bring in our guest for today, Professor Ken Ife, macroeconomic analyst and chief economic strategist at the ECOWAS. Welcome to the program, Prof.
Oh, thank you. Thank you for having me.
Now, Prof, I believe you must have seen the budget for the year 2023, budget of fiscal consolidation and transition. I want you to wear the lens of a macroeconomic analyst and give me your overview of what you think about the budget and the key assumptions we have seen in the 2023 budget.
Well, let's start with the assumptions. I think largely, if the output is put at 1.69 million a day. Throughout last year, we were underperforming in the large part, under 1 million barrels a day. We have capacity to go up to 2.1 million barrels a day. We've done that in the past. So the issue is, how much can we achieve in ramping up the production volume? Now we're over 1.2 or somewhere around that goes. But the one that worries me a little bit is the price that shifted from $70 to $75. Now you've seen what the price is. It's around 78. So there's a very, very tiny headroom. But that is not as important as the production volume, because if you can have the production volume up, then we could worry less about the top price, because whatever happens, if you don't have both, live with nothing, no accretion to the reserve and no accretion to the excess crude account, apart from compounding our fiscal challenges. Then the inflation figure, I'm not very sure about that. At 70, budgeted at 17.16%, when the reality is that we're around 22% now on inflation. And I still think that inflation will still rise for December, but then we'll begin to cool for January and February. So we'll just have to see how that goes. Very, very unlikely we will get down to that figure. The GDP growth rate of 3.75%, I can say is doable if only we can invest more on expanding our output, especially in the non-oil sector. That's where we have so much scope on increasing our output. But that notwithstanding, the predictions have been that generally the growth globally will go down. So I may still think that we may end up around 3.3, 3.4, but we'll be stronger than 3% anyway. That's what all the fundamentals point.
Prof, I want to stick to the inflation prediction, the inflation assumption, right. 17.16%, and you have rightly said that you're not so sure about the assumption for inflation in the 2023 budget. What rattles you about that assumption?
No, if you notice, we had a flood that covered over 200% of our 200,000 hectares of our farmland, and that immediately started putting up prices. You could see from that moment, from that October, you saw the price of a bag of rice, 50 kg, rise from 28,000 to 30 to 35, 40, even to 60,000 at Christmas. So that is a substantial rise, and that's how you have rises across the other food sectors. So then you saw what happened to Forex, partly reacting to usually this is the time of the year that the Forex would rise anyway, because there are so many demands on it. You have people going on holiday, you have school fees to be paid, you have people importing goods for the December crisis, paying for a dollar. And then you have all the traders trading in foreign exchange, and then you have all the political arrangement that is requiring a lot of money to settle. So all of that spiked the dollar to about 720, 750, but 950, 920. But it come down now to just around 800, and under 800, just saying, yes. 700 or something. So, but that is inevitable that prices are going to rise. Normally, at the end of the year, you have the highest level of inflation. So, if anything, it's going to be higher than we would have been seeing in the previous months. So that's the cycle.
Prof, I want you to speak to issues around revenue. I remember when we were watching the breakdown, and the Director General of the Budget Office, Ben Akabweze, he was saying that conversations around the budget should be surrounded around revenues, basically. Now, we are seeing a deficit of 10.78 trillion naira. How worrisome is this, looking at the whole revenue situation? And the debt-to-revenue ratio, according to data from the Ministry of Finance, is as high as 80%. Now, is there a silver lining in terms of the situation with revenue, especially as we look into the year 2023 with expectations on the economic front?
Well, if you look at the debt side, there are projections that by June or May, we will be hitting 77 trillion. At that level of debt, that now means that our debt to GDP ratio would have pushed far above 35%, 36%. So we are hitting the roof on that. Then you come to the revenue side. The revenue, the debt service to government revenue is, as you just said, is over 80%. It's about 85 to 86%, and that is at the end of the year. But normally what happens is at the beginning of the year you will be hitting 100%, 90%, 98%, but revenues come gradually as you head towards the end of the year. So that's what happens. It is heavier at the beginning. Now the thing is, it's getting very, very worrisome if we don't sort out the issue around the ways and means, which is 23 plus 1 trillion. Then it's going to hurt the economy more. Let me tell you why. Normally, we shouldn't have been doing more than 5% if you follow Nigerian law of overdraft. And then even then, it's supposed to be liquidated within the financial year, but that wasn't the case. Criteria even was more generous and said you can lend up to 10% of government's revenue in the previous year. Okay. Now, the thing is that if we have to make it business as usual, The repayment from government would be the base rate, which is 16.5%, plus maybe a premium of 2%. That is very high. Is that by the time you add the capital repayment and interest payment and put it on top of this particular amount we are paying now, government will be heading to 9 trillion of debt service. So the second option is, why don't you go to treasury bills? Treasury bills are around 15% now, and it's short term, 1 year. So you're going to have to look at instruments which, according to FRA 2007, says long-term borrowing. So the long-term borrowing envisaged by government is 40-year term on a loan bond swap, which is not bad because it is coming in at 9%. It's constitutionally lending for this. Constitutional lending is already at 2-3%, and the constitution actually says the act says less than 3% for constitutional lending.
Prof, I want to hold you on that.
I think this 9 is a good deal.
Prof, I want to hold you on your thoughts quickly. Let's quickly take a listen to what were the outcomes from the breakdown from the Ministry of Finance.
The public presentation, which took place at the ministry's headquarters in Abuja, is aimed at giving the public an insight into the nation's proposed spendings for the year and also allow for comments and questions from the public. According to the finance minister, the 2023 budget was prepared on the backdrop of global and domestic challenges. During the presentation, the minister revealed that the federal government has spent about 5.24 trillion naira on debt servicing alone between January and November 2022.
The deficit to GDP ratio is 5.03%, which is higher than the 3% as stipulated by the Fiscal Responsibility Act. And we're working with the National Assembly to determine what we need to do, whether or not we need to amend that provision of the Fiscal Responsibility Act, because several countries have actually done that. In the times in which we live in today, that 3% is no longer realistic. Public debt to GDP, we have 22.8%. This is as at 2022, but this has since moved on to 35.33%. Once we, this is as of September, once we adjust to the ways and means that has already been approved to be securitized. So once we bring it in, this will take us to 35.33%.
Nigeria's tussle with subsidy removal was once again brought to the forefront. The Buhari-led administration had planned to remove fuel subsidy by June of 2022, but the plan was shelved following outcry by Nigerians.
The projected fiscal outcomes in the 2023 budget is based on petroleum subsidy reform ratio, and that is to say, in the 2023 framework, we had assumed, and the National Assembly had approved, that the petroleum subsidy would remain up to the middle of 2023, based on the 18 months extension announced early in 2022. In this regard, only 3.36 trillion has been provided for PMS subsidy in the 2023 budget.
Ahmed, who spoke on the implementation of the 2022 budget, which the National Assembly has extended to March 31st, 2023, stated that the retained income of the federal government was recorded at 6.5 trillion naira, or 87% of the prorated objective of 7.48 trillion naira.
All right, there you have it. Updates from the Minister of Finance, Zainab Ahmed there. I'm going now straight to Professor Ken Ife, who is our guest on the program today, macroeconomic analyst and chief economic strategist with ECOWAS. Prof, you've heard from the minister there. I want you to land on your thoughts and also add what you think from some of the statements from the minister.
We're on the same page with what the minister said. We are completely on the same page. The provision for the, what do you call it again, the fuel subsidy, I don't like to call that word, fuel subsidy is about 3.36 trillion. Obviously, that is hoping that the NNPC will come up with their refining process and start giving us locally refined PMS. But we'll have to see how that goes. That's the best expectation. So half of that money, it was meant to be 6.8 or something, but it's now half, which is 3.36. So we'll have to see whether that materializes, but that's how it is. And then, of course, you have the issue that she raised about the percentages are correct, what the current debt to GDP ratio. But I said that if we look at what happens at the end of June and you get this 24 trillion added, it will be about 77 trillion debt, and that will push the debt to GDP ratio to about 7%. And that's not where we want to be, but that's the reality. And then all the other things she made, all the things she said, we are all in line.
Okay, thank you. Thank you so much, Professor Ken Ife, macroeconomic analyst. Thank you for coming on the program to share your thoughts on the 2023 budget.
Thank you.
All right, and that's where we call it a wrap on the program today. Don't forget you can catch up on all the updates on Trust Television on our social media platforms. Go on YouTube, click on the subscribe button. I know you don't want to be left out on major updates making the round in the polity, and of course news in the country and from the global scene. I am Christiana Amodu Otinya. Thank you for investing your time with me today and continue to stay safe. Bye for now.